Good morning, good afternoon, good evening, wherever you are. I'm your host, FD for Sage5.tv, and today we want to talk about Ethereum. It's about time we start talking about Ethereum's underperformance, this current cycle. What is going on? We want to jump into that. But before I get into this video, guys, please know that I am not a financial advisor. If you do require financial advice, please approach someone who's trained to give you financial advice. The information contained in this video is just for educational as well as entertainment purposes, and the content is also not targeted at UK audiences, for the sole reason that the UK authorities do deem anything crypto related to be extremely risky. Therefore, they're trying to protect you. That said, guys, let's come back to Ethereum. Why is it underperforming relative to Bitcoin and its rivals in the likes of XRP, Solana, BNB, and so many others? Why is Ethereum underperforming? That's what we want to jump in. So Ethereum's relative underperformance during this bull cycle, especially compared to Bitcoin and competing layer ones like Solana, BNB, Cardano, and the others, can be attributed to several interconnected factors. Let's break down the reasons why Ethereum hasn't seen the growth or the explosive growth that we've seen from other competing layer ones as well as Bitcoin. So some of the contributing factors could include the fact that layer ones like Solana, BNB, Cardano, XRP, Sui have seen explosive growth. Avalanche, not bad as well. It's gone quite a bit from its all-time lows. Aptos, maybe all those have diluted Ethereum's dominance. Solana, for example, gained traction due to its low fees and high throughput, but at one point it almost went under, but it recovered and it's outperforming everything at the moment. The perception that Ethereum scaling upgrades, that is sharding and layer 2 rollups, are progressing slowly has allowed competitors to capture market share, and also these layer 2s, I think they are also diluting Ethereum mainnet's capabilities because traffic is now moving on to layer 2s and there is no direct benefit that Ethereum is deriving from its layer 2s because all the transactions now happen elsewhere and you can actually onboard onto a layer 2 than onboarding through Ethereum. So that says a lot. Next, you got the lack of speculative narrative compared to Bitcoin. Bitcoin's narrative as a digital gold and hedge against inflation has driven its price higher than that of Ethereum, especially around the ETFs and stuff. And now you got sovereign funds and countries buying Bitcoin as a reserve asset. Bitcoin's clean and simple narrative resonates better with retail and institutional investors, whereas Ethereum is viewed as a complex technology platform with various use cases, making it harder to market during speculative bull markets. With Bitcoin, digital gold, store of value. Those are narratives that people can articulate to the layman, a guy from the street and all that, and they understand straight away. Whereas when it comes to Ethereum, you actually need to sit someone down and have a whiteboard and try and explain what's going on. It's just like trying to explain to someone what the internet is. No one wants to know what the internet is. All they want to do is use what's hosted on the internet. If you take someone and sit them down and say, this is how the internet functions and this is the value the internet brings to you, people will just dismiss you. All they know is that their Amazon web app, Facebook, LinkedIn, that's all they're interested in, but they don't realize that all those things, if the internet wasn't there, those things would be useless. That's a hard sell though, trying to convince someone of that. Next, you got gas fees and user frustration. High gas fees remain a persistent issue on Ethereum, leading to user migration to cheaper alternatives like Solana and Avalanche. Although layer 2 solutions like Optimism, Arbitrum, Scroll, and a few others are helping alleviate some of the congestion, adoption is fragmented, limiting Ethereum's growth. And like I've already said, some of these layer 2s, they are not there to support Ethereum, they are there to steal from Ethereum. That's how I see it. You make your own decision on that and make up your mind on that. Next, DeFi and NFT market slow down. That is another factor we can't dismiss. Ethereum's previous growth cycles were fueled by DeFi. For example, you had Uniswap, I think it was during 2017. I think it was during the 2017 bull market. That's when Uniswap launched, I'm sure. And then you got Aave and many others. And you also have NFT boom. For example, the last cycle, NFTs went crazy. You're talking of OpenSea, Bored Apes, and so forth. So Ethereum gained a lot from those narratives running. This cycle, however, these have seen slower growth. You're talking of DeFi being slow, decline in NFT trading volumes, reducing on-chain activity and investor interest. I don't know if we'll ever get to a point where the last type of NFT will come back again, because those who bought into some of those NFTs, they've seen them go to zero with no liquidity and no value. So I don't know if they come back, the same people who want to buy them, maybe new investors, but new investors might be interested in something like AI agents and so forth. So the return of NFTs, while you cannot count it out, it's not going to be as smooth sailing as it was or as easy as it was during the last cycle. Next, you got market saturation and diminishing returns. Ethereum entered this bull market with much higher market cap, limiting its potential for exponential growth compared to smaller layer 1 projects like Solana, Avalanche, and many others. Ethereum is perceived perceived as a more mature asset, leading to relatively lower speculative demand. Forget about people who are talking of dilution because you got millions and millions of projects launching every day. Some of those projects, they don't survive a 24-hour period, and it doesn't also mean that the liquidity is going there. Of course, there are some people who are playing around there, but most of the liquidity will stay in some serious projects. I know we've had the meme season where people were just throwing money and throwing a dart, trying to make 100x in a 24-hour period or within a week. But I think we are past that for now. We are past those periods now. I think now it's about value. People are moving into value, as you'll find out as the bull market progresses. Next, regulatory uncertainty around Ethereum's classification. Now I think things will change, especially from the US and the rest of the world, and the rest of the world will follow. Now we are looking at regulatory certainty being ushered from the States. Ethereum's transition to proof of stake from proof of work and its staking rewards have led to concerns that regulators, especially in the US previously with Gary Gensler, could classify ETH as a security. And he also had the likes of Michael Saylor championing for that to happen. Yeah, he is a Bitcoin maxi. He doesn't represent me. He represents Bitcoin, and that's it. I'm a crypto maxi. Bitcoin and altcoins, I'm all in, not just Bitcoin. So this uncertainty for Ethereum has caused hesitation among institutional investors, diverting funds towards assets with clearer regulatory status like Bitcoin. Next, you got macroeconomic conditions favoring store value assets. In environments of rising interest rates and economic uncertainty, investors favor assets like Bitcoin, gold, and so forth, which are perceived as long-term store of value. Ethereum, on the other hand, is being tied to the tech and DeFi ecosystems, behaves more like a risk asset, leading to underperformance during risk-off periods. Bitcoin is moving away. I think it's decoupling from the rest of the crypto markets, but at the moment it's very hard to separate it from the crypto markets. In fact, it does lead the crypto markets. When it goes down, when Bitcoin coughs, the rest of the crypto markets catch a cold. I think that's what they say, isn't it? So here is a quick summary of some of the key factors as far as Ethereum's underperformance is concerned. We talked of layer 1 competition, capital diversion to faster, cheaper alternatives like Solana, Avalanche, which dilutes Ethereum's market dominance. Then you got the Bitcoin's dominance, where Bitcoin has got a cleaner narrative as digital gold, and it drives higher speculative inflows compared to Ethereum's tech-focused story. Next, you got high gas fees for Ethereum, which frustrates users and developers, pushing them towards competing blockchains with lower transaction costs such as Injective, Sui, Avalanche, Cardano, XRP, Binance, and many others. Next, the slowdown in DeFi and NFTs. So the decline in DeFi TVL and NFT trading volumes limit on-chain growth and price appreciation for Ethereum. We also have market saturation, where Ethereum's large market cap limits exponential growth compared to smaller layer 1 competitors such as Avalanche, Solana, Sui, Cardano, and many others. Regulatory uncertainty. Concerns about Ethereum being classified as a security create hesitation among larger investors, but I think in the US they're trying to fix that, but that is still an issue elsewhere. Macroeconomic conditions all favor Bitcoin, and the risk-off sentiment favors Bitcoin over tech-driven assets such as Ethereum. So will Ethereum catch up later in this cycle? I think Ethereum's underperformance may only be temporary. Once scaling solutions mature, which they will over time, or Ethereum actually scales the mainnet, find that magic pill to scale Ethereum mainnet, as well as DeFi and NFT markets experiencing a revival, Ethereum could see a delayed breakout. Institutional adoption through staking services and real-world asset tokenization on Ethereum could also be the catalyst, because real-world tokenization, most of it will happen on Ethereum because of its security, of course. However, for now, investors seeking explosive growth have clearly gravitated towards newer layer 1s like Solana, Avalanche, Binance, and established safe assets like your Bitcoin, and some even going as far as gold. So those are my thoughts on Ethereum, guys, but I think it will come back because real-world assets and tokenization is going to be the next big narrative. So if we then combine real-world assets with tokenization and DeFi, I think that will be an explosive combination. So Ethereum, it will come back. And you can tell, those who can see what's coming, they are buying Ethereum like crazy. Talking of Donald Trump's project, his companies, his sons, they are buying a lot of ETH, as well as Ethereum-based DeFi projects, as well as other real-world assets and tokenization. My question to you guys is, do you think Ethereum is dead or is coming back? I certainly don't think so. And do you hold Ethereum? I don't hold that much Ethereum. I only hold for transacting purposes, because I think I can get better returns from elsewhere. It's about returns here. Anyway, let us know your thoughts in the comment section, guys. Until the next one, this is FD for Sage5.tv signing out for now. Bye.